If you want to see the market forecast first, go to slide 6. Howdy swings. Today, the Wall Street Journal article that came out this morning helped the market, and the market continued to rally. However, as soon as the SPX reached 5,600, it encountered strong resistance. Will the market be able to break through this resistance and rally on Friday? Let's take a look at Fullhapce daily swing market forecast to get some answers. Let's review daily market index movements. The markets continued to rally, with all major indices rising. It's worth noting that the VIX is down 24% this week, which is remarkable. SPX, 5,595.76, 0.75% up. Dow Jones, 41,096.77, 0.58% up. Nasdaq, 17,569.68, 1% up. Russell 2000, 2,132.8, 1.27% up. Let's look into daily sector performance. All the sectors were bullish. Communications and discretionary consumer goods stood out. Let's take a look at some of the reasons why. Stocks had a strong day on Thursday, with the SPX index aiming for new highs. The reasons are not clear, but expectations about the Federal Reserve's decisions played a big part. A Wall Street Journal article suggested a possible 50 BP rate cut next week. U.S. Producer Price Index, PPI, and European Central Bank, ECB, rate cut were as expected, which was positive for the stock market. Here are the things to consider. Stock prices are too high, inflation is easing too slowly, and there's a lot of political uncertainty. Recent reports show a slight rise in producer prices and an increase in jobless claims. Things are getting worse in China, where oil consumption is sluggish and Western companies are pulling out. India's August inflation was higher than expected. The recent poor performance of retailers is a concern. There are reports that people are spending cautiously due to falling savings, rising borrowing costs, and persistent inflation. The EU risks further escalating its conflict with China, as it refuses to allow Chinese electric car manufacturers to adjust their prices. The conflict in Ukraine is escalating. Here we present the daily market forecast for swings. The weekly market has strong upside potential, but uncertainty is near critical mass and volatility is high. The daily market also has strong upside potential, but volatility is high. As a result, the daily market is likely to be mixed. The resistance at SPX 5,600 was stiff, and although it was reached around 2 o'clock, it failed to move up at all by the close. Investors lack confidence, while bears seem to want to test the downside stress strongly before the Fed decision. Most experts believe that the SPX is unstable and will not reach new highs anytime soon. If that's the case, it's possible that the market will plunge sharply on Friday, September 13th, with the SPX retreating below 5550 and closing lower. But even if that happens, if the market shows strong support, the rally could continue early next week until the FOMC on Wednesday. Let's explore some additional insights. The overall environment is still good for stocks because inflation is slowing down, the economy is holding up, interest rates are lower, and company profits are decent. However, stock prices are still quite high, and the path to a smooth economic landing is risky and narrow. There are also significant political risks coming up. But if current positive trends continue, the index might rise sharply before November 5th. Let's look at the counterarguments. The opposite scenario would be for the market to rally without a pullback and close higher on Friday, testing the SPX 5650 resistance level. This could be an opportunity for bullish traders to buy a little more to take advantage of the rally. The rationale for this scenario is as follows. Low inflation, strong economic growth, accommodative monetary policy, and stable corporate earnings have created a favorable environment for equity investing. On Thursday, international inflation rates fell. In the U.S., the Producer Price Index PPI slowed to plus 1.7% in August. The month-over-month rate was up slightly. An article by Nick Timiraos in the Wall Street Journal on Thursday afternoon sparked a debate about whether the Federal Reserve should raise rates by 0.25% or 0.5%. The article included quotes from former Fed officials who did not take a strong position but supported a 0.5% hike. Good earnings reports from the airline industry provided some positive news. On Thursday, Retailers reported slightly improved earnings and raised their sales forecasts for the year. Updated statistics from the Fed showed that U.S. households are financially healthy. Taking all into account, we think the opposite scenario is also somewhat of a possibility. The conclusion is as follows. We believe that the weekly market will close higher on Friday, but the daily market is likely to test the downside pressure. Therefore, investors should be wary of the possibility of a sharp pullback on Friday. However, if the market shows its willingness to move higher, the rally could continue in a choppy manner from next Monday until the FOMC. In this case, traders may be wise to remain bullish, buying more on dips and hoping for a rebound. Also, traders may be wise to consider both our main forecast and opposition scenarios to manage risk effectively. Thank you for watching. Fullhapce Intelligence, the best investment partner for swing traders.